NBFC players, especially the CV financiers, have reported a strong disbursement growth in Q2. At least most of the CV players like Shriram Transport Finance as well as Cholamandalam Finance and Shriram City Union Finance have reported a good disbursement growth. We have seen margins improving for quite a lot of the players in Q3, as well as most of them have reported relatively contained NPA stress. In fact, we at ET Now spoke to Umesh Revankar of Shriram Transport, head of Shriram Transport Finance, and he did state that overall he is fairly positive in terms of the growth of the CV industry. In an exclusive conversation with ET Now, Mr. Revankar did mention that it is only a matter of time that we do see huge amount of demand coming in as government spending picks up, as the investment activity in the economy picks up, and as private capital comes in. In fact, he sees that the demand is likely to be for a long term, for at least the next 2 years, and it would be a consistent demand. However, there are certain risks that he also highlighted. One is that yes, localized lockdowns on account of surge in COVID cases is one of the biggest risks that he articulated, along with the fact that he mentioned that we should also be keeping a track on what is happening to the global economic front, because India economy is also related to global economic activity. So from that perspective, even global economic trends do impact the activity on ground in India. In fact, he believes that overall this dynamics of the CV industry has largely remained same. There hasn't been any change. The number of players pre-COVID and post-COVID continue to exist. There haven't been really too much of new entrants in the CV business, and quite a lot of the NBFC players are present in their niche business, and hence there is an opportunity for each one of them to grow in their respective niche segment. In terms of the new vehicles, Mr. Revankar did state that the average ticket size of the LCVs, which is the light commercial vehicles, was about 3 lakhs earlier, and as we have seen that the prices are going up, and there are also new number of new vehicles that is coming in terms of the LCVs particularly. He mentioned that as the prices of the new vehicles move up, the value of the used vehicles also go up. The number of the used vehicles increases, its utilization will increase, and hence the prices would also increase. There are about 1 crore vehicles across India, and of this new vehicles are nearly around 7 to 8 lakh only. As and when there is a change in hands in terms of the used vehicle, therein a financer or a CV financer is really needed, and hence there is going to be good demand in terms of CV finance. Speaking about the margins, he did mention that while yes, the margins have expanded and interest rates have bottomed out, there is going to be lower borrowing cost, as well as the surplus on the liquidity surplus as it goes down. The Shriram Transport would in fact be looking to pass on the benefit of lower borrowing cost to its customers, and hence we may see a temporary margin expansion of 25 bips over the next few quarters, but they would not want to expand the margins in a manner that it puts their customers at a disadvantage. Speaking about fintech, Mr. Revankar did mention that he does not see the fintech model to disrupt lending in the CV finance business. I'll quote him. He stated, "I don't think fintech as a lending model has penetrated in any segment. Fintech is used as a tool, not as a way to lend or change the underwriting of business. Human intervention is always required in lending activity, and I don't think fintech will disrupt lending, whether it is lending in the CV finance business or other lending." So yes, there are some of the few important details of our exclusive conversation with Mr. Umesh Revankar.